Hey everybody, this is John and welcome to the free videos. What a crazy day today. So what do we have going on? We had a huge rally in the S&Ps up 1.56%. So I would say any move over 1% is a move with conviction. So you can see we came down almost all the way from -2 ATR. So right now, well, 3.71 is the average true range at this point. You can see the average true range is expanded. So we're able to go from -2 ATR. We touched the mean. Remember, the markets always revert back to the mean. Then the question from there is after reverting back to the mean, are we going to roll over and take out the lows, or have we in fact bottomed out here? All right. And so what are some of the things that we can look at for that? Well, of course, one of the things is that yesterday we had a trend reading over 2.0. I'll talk more about this in the premium video. But basically, whenever you get a trend reading over 2.0, which happens about once or twice a quarter, okay, it doesn't happen very much. 8 times out of 10, you get a pretty decent bounce the next day. So we did get that, plus we also had the tariff news, all right, and that led to a volley of short covering. And the question is for tomorrow, is without that trend 2.0 reading to support the market, without presumably another positive trade war tweet, what can the market do? And if we look at this from a daily chart, we've reverted back to the mean. The natural path here would be to start working its way lower. It doesn't mean right away. But a lot of times with stuff like this, you typically are not going to see a V-shaped bottom, okay? So the other thing to keep in mind is that Apple had a fantastic day today. While the indexes were up 1.5%, Apple was up a whopping 4.2%. Apple makes up a huge part of all the indexes. So certainly drove up tech, drove up the NASDAQ, and they had stellar days. But again, they reverted back to the mean. So while Apple actually did push through its mean, the indexes itself, which are a representation of the market, basically just kind of, rallied up to the mean. So in this kind of a market, I do like these levels because we've, just basically rallied back to the 21 on the indexes. I do like these levels for long put opportunities, but at the same time, there are stocks here that I like to the long side for calls. So essentially, buying puts on the index is a hedge because we are in a volatile and down environment. And as we've seen, when the market does go to the downside, it can happen very quick and very violently, and it's hard to get in on that unless you're already positioned. So on the long side, I like stocks that are kind of doing their own thing. Roku at this point, of course, is very, very extended, but stocks that are hitting new all-time highs in this environment are great ones to look at and buy on pullbacks, all right, because they don't care what the rest of the market is doing, all right? So that's what I like there. And on the downside, I like Netflix because Netflix doesn't care what the market is doing in reverse, meaning that even a big market rally at this point can help Netflix. So that's what I got. I got a lot more to dive into and cover in the premium video in terms of some of the key internals I'm looking at here. You guys have a great evening, and we'll see you at the next update.